Today, Bitcoin falls to the $63,000 level to cap off a week of losses. Two House lawmakers visit the Binance executive detained in Nigeria, and the head of litigation and investigations at Consensys discusses the SEC's decision to end its investigation into the company. Welcome to CNBC's Crypto World. I'm Jordan Smith. Crypto prices in the red to end the week as of noon Eastern. Bitcoin dropped more than 1.5% to the $63,000 level. Ether dipped slightly, trading to just under $3,500, and Solana fell more than 1% to $131. For the week, crypto prices are mixed, with Bitcoin down more than 2.5% and Ether up nearly 3% as of noon. Solana is down more than 7% for the week. All right, let's talk about the top stories. Two U.S. lawmakers visited the Binance executive detained in Nigeria, and they're calling for his release. Representatives French Hill, a Republican, and Chrissy Houlihan, a Democrat, visited Tigran Gambaryan in prison while in the country to discuss anti-terrorism efforts. In a post on X yesterday, Hill said that Gambaryan is being wrongfully detained and should be freed. The congressman said Gambaryan is suffering from malaria and double pneumonia while being denied access to adequate medical attention. In a video in the X post, Congressman Hill said that he asked the U.S. Embassy to advocate for the humanitarian release of the Binance exec because of, quote, horrible conditions in the prison, his innocence, and his health. Hill was among the lawmakers that signed a letter to President Biden earlier this month urging him to work for Gambaryan's release. The executive has been detained in Nigeria since February, facing money laundering charges due to his involvement in the crypto exchange. Next, the Winklevoss twins donated $2 million in Bitcoin to support Trump in the upcoming election. In a post on X yesterday, the founders of the crypto company Gemini said they each donated $1 million in Bitcoin to support the candidate. Tyler Winklevoss wrote that President Biden's administration had, quote, openly declared war on crypto and that Trump was pro-Bitcoin, pro-crypto, and pro-business. We reached out to President Biden's campaign for comment but didn't hear back right away. Trump has presented himself as a champion for crypto and met with Bitcoin mining executives earlier this month, including those from the publicly traded companies Riot and CleanSpark, while the crypto industry is increasingly trying to influence the upcoming elections with millions in donations to crypto-focused super PACs. Last, a California judge ruled that a civil securities lawsuit against the crypto company Ripple will move ahead to trial, but dismissed allegations suggesting that Ripple violated federal securities law by selling its token XRP. The federal judge for the Northern District of California ruled yesterday that a jury will hear arguments on whether Brad Garlinghouse, Ripple's CEO, made misleading statements in connection with the sale of securities in a 2017 interview. The judge tossed out other claims in the class action lawsuit. According to court documents, attorneys for Ripple argued that the claims should be thrown out because XRP does not meet the definition of a security under the Howey test and therefore can't give rise to a claim for misleading statements in connection with a security. In yesterday's court document, the judge said that Ripple argued that the court should follow the reasoning of Annalisa Torres, the federal court judge for the Southern District of New York, who ruled XRP did not meet all the points of the Howey test when sold to retail participants on crypto exchanges. That ruling was considered a partial victory for Ripple. Now, we reached out to the firm regarding the development in California, and in a statement, Ripple's chief legal officer said that the one individual state law claim that survived will be dealt with at trial and that nothing disturbs the ruling from Judge Torres in the SEC case. Now, this afternoon, Ripple CEO Brad Garlinghouse posted on X that the fact that 4 out of 5 claims in the suit were dismissed is a, quote, big win, adding that nothing in the decision negates or changes the fact that XRP is in and of itself not a security, according to the New York court decision. He added that regarding any misleading statements, he stands by what he said and is looking forward to shedding light on that during the trial. All right, for our main story this week, Consensys said that the SEC closed its investigation into Ethereum and won't pursue enforcement action against the company. Crypto World's Talia Kaplan spoke with Laura Brookover, head of litigation and investigations at Consensys, about the development and whether the crypto firm still plans to pursue its lawsuit against the agency.
I want to discuss a big development for Consensys this week. In a blog post on Tuesday, Consensys announced that the SEC notified you that the agency is closing its investigation into Ethereum 2.0 and will not pursue an enforcement action against the crypto company. This development came after the Wells notice Consensys says it received from the SEC and the lawsuit filed by Consensys a couple of months ago, alleging regulatory overreach by the regulator. What was your reaction to this latest development, and what do you think it signifies for the industry as a whole?
Well, we were very pleased to receive the letter noting that the investigation into Ethereum 2.0 had been concluded and that it was concluded without charges against Consensys. It's the right result. It's the result that should have happened a year ago. It's a result that we're trying to seek in our lawsuit. So we're very pleased that this happened. But of course, the fight isn't over. The Ethereum investigation was just one of 3 investigations that Consensys has been facing and that are the subject of our lawsuit in Texas.
And so what do you think this development signifies for the industry, if anything at all?
Well, it's hard to say. The letter itself was very short. It was very clipped. It said only that the investigation was concluded, no charges were being brought, but it even resisted it disclaimed us drawing any conclusion from it, such as, that they found that Ether was a commodity and not a security. So although it's welcome that the investigation is over, it doesn't go far enough to provide the sort of transparency that the industry really needs as to why the SEC has closed this investigation and how that decision is relevant to the many other investigations and enforcement actions that are ongoing. So although we're pleased with the result, it just doesn't go far enough.
So what happens now? Do you still plan to pursue your lawsuit against the SEC? And if so, what's the main reason for moving forward with the suit? I know Consensys sued the SEC back in April to, quote, defend the Ethereum ecosystem, according to blog posts. But now that the agency is closing its investigation into Ethereum, do you think moving forward with this lawsuit would still be an important step for Consensys and the crypto industry at large?
Well, not everything that we've sought in the lawsuit is redressed by this letter. Like I said, there are 3 investigations into Consensys. One dealt with Ethereum 2.0, or the merge, which was the transition to proof of stake. And that lawsuit was really focused on the Ethereum protocol itself and Ether on its own, whether Ether on its own was a security as a result of the merge. But there were 2 other investigations that we've dealt with, and those have culminated in a Wells notice finding that the Consensys has violated securities laws with respect to MetaMask swaps and MetaMask staking. Those are very important product features for our MetaMask wallet software. And one thing I want to emphasize, the MetaMask staking product feature, it relates to Ether staking. So services that Ether holders can take advantage of to stake their Ether. So although the investigation into Ethereum 2.0 and Ether on its own is concluded, there are still big questions around staking services and how the SEC views those. And until we get definitive answers and really a judicial ruling that we have not violated the securities laws, we're going to keep fighting, because we brought the lawsuit in light of this cloud of regulatory uncertainty that's been hanging over our head for years. And while this letter goes a little way in removing that cloud, it doesn't go far enough.
So just to be clear, you are in fact continuing with your lawsuit against the SEC?
Yes, I mean, we're still reviewing the implications of the letter, but as you know, our current plans are not to change and to continue fighting so that we can get the relief that we brought the lawsuit to seek.
Expanding on what you just said, does this week's development settle some of the other concerns you outlined in the lawsuit against the SEC? The suit claims the SEC has wavered on Ethereum's classification as a security. Do you think that is more clear now?
Yes, the letter does give us some of what we've sought, and I think that's important to underline. We asked the court to declare that the Ethereum investigation was unlawful and that it could no longer proceed, and that also the SEC should be barred from bringing an enforcement action against Consensys predicated on the Ethereum 2.0 investigation. Now, the letter, by saying that the SEC is closing the investigation without charges against Consensys, does give us some of the things that we have been seeking in the lawsuit. But again, we still are looking for that declaration that MetaMask swaps and MetaMask staking are not violating the securities laws. And so there's a lot still to deal with.
I do want to mention we've reached out to the SEC about this latest development, and a spokesperson told us the agency does not comment on the existence or non-existence of a possible investigation. But what do you think changed? Why do you think the SEC closed its investigation into Ethereum and won't pursue enforcement action against Consensys. In your blog post from this week, I read that following your lawsuit, several policymakers, including members of Congress, voiced concerns over the SEC's Ethereum investigation. Do you think that played into it at all?
It's the million-dollar question: what changed? Because if the SEC has changed its policy positions, which is really sort of would be the most welcome news to the industry and to Consensys, that would be wonderful. We don't know. The SEC hasn't told us what changed, right? They just sent us a letter with no explanation, simply saying they concluded their investigation. I have to think, though, that just if you look at the timing and the chronology of all this, that the Ethereum investigation was full bore before we brought our lawsuit. And then after we brought our lawsuit, there was mounting pressure from members of Congress, from others in the industry who previously had been unaware of this investigation. You have to think that that did lead to the SEC backing down on the investigation. But it would be really useful for everyone to know what the SEC's considerations were, what they concluded as a result of the investigation, what facts they found, what determinations were made, and we haven't heard anything like that yet.
Brookover also discussed what she thinks about the SEC approach of regulation by enforcement, and you'll be able to check out that full interview over at cnbc.com/cryptoworld. All right, that's all for this week. We'll be back on Monday, and we'll see you then.